Good day. Just I wanted to basically, it's basically more of the same. But the reason I wanted to tell you this specific video is because what I'm doing is I'm changing my strategy a little. Apart from trading in real time, meaning once I'm able to trade and take the profit, I go back and get another trade right away. So I'm trading in real time at all times. I'm not waiting for the market to move in my favor to get a trade. I'm just going to buy it and let the market do what it does. It fluctuates. But what I want to do specifically was I want to show you the balance. It has increased. I'll show you how it's increased. It's at 5142.30 and that was yesterday. I think it was 598. So I traded a little and I got some positive profit. But what I want to show you specifically was the currency pairs. The currency pairs, what I've done is I've increased the lot size. So if you can see there, the lot size is USD Canadian 5 lots, silver USD 5 lots, and the Great British Pound in USD of 20 lots. So what I'm doing is I'm basically having a larger portion of my portfolio, because this is my currency portfolio basically. I'm having a larger percentage of that in Great British Pound / denominated USD. So that's going to counteract the other movements when the USD is the numerator and the Canadian dollar is the denominator. So that's what I'm doing, and I've been able to do some positive trades and make some profits with that. But as you can see, the lot size, because the lot size is 4 times as much, because 5 times 4 goes to 20. So the lot size for Great British Pound is 4 times as much as USD. So it's Canadian. So therefore it has a stronger impact on the weight of the currency pair and the weight of the basket of currency that I have. So the direction in which the currency moves is more influenced by that currency pair. I might fluctuate that, and I might even it up later on in terms of increasing USD Canadian to 20 as well. But before I do that, I'm gonna make sure I make a profit off of this trade now, because right now it is 453 basis points below where I bought it at. So I'm $182 in the hole. So I'm not gonna trade that right. I'm not gonna increase my stock in that right now. I'm gonna wait until that fluctuates and moves up and becomes profitable for me, and I earn revenue from it. So that's basically where I'm at right now. Let me just, and then I'm still getting rid of the silver XAG denominated in USD. I have five lots of that. I'm still getting rid of that. But let me just show you. Also, I want to show you. This is the currency. This is my currency, the statement that I get. I get a daily statement of currency pairs that currency that I've been trading. You can see the price, where I bought it at, where I sold it at. This was January 12th. This was, I guess, yesterday. I closed out some trades, and yeah, that's basically just what you do when you have when you trade currencies. You trade when it's profitable for you. And these are some of the breakdown of the lot sizes. And what we're doing, you can see that there is a quantity size of 5 lots and 10 lots. You can see that there. And the Great British Pound is increasing. You can see that there. And this will just show you the profit per trade. The last one was at 85 cents. But the one before that was $14 and $5, $6, and total of about $46 in trading yesterday. So yeah, of course I'm gonna, God willing, increase that over time as I become more familiar with the currency pairs, and as I become more familiar with the lot sizes, because like I said, this is like riding waves. So this is like if you're surfing on a wave, and because the lot size for Great British US / denominated USD is 4 times as much as USD denominated Canadian, that has potential to basically affect you positively or negatively, depending on how the market moves. So you want to be able to uh, absorb those changes or fluctuations, and you want to be able to ride the storm out, ride the waves, and just surf. That's like my strategy. I surf. I don't try to outguess the market, because it's basically impossible to outguess the market, but you can definitely ride the waves. So I hope that you like joining me for my learning a little of currency trading. I mean, it's nothing like getting in there and doing it yourself, because persons can tell you everything they know about currency trading, but when you're in it and it's your money on the line, it feels a little different. It feels a little different, and your heart is in it, and you try not to make emotional trades. Like, I try not to trade based on emotion, but because I've been doing it for a long time, I can do that. But when I first started, definitely my heart was in my mouth sometimes when currencies would fluctuate, and I would be like $100 in the hole, like how it is now, of $181. Basically, a total of $270 of unrealized losses, basically, if I was to execute or cancel those trades. But I'm not going to do that, because I don't trade on losses. My strategy is to trade on profit, so I don't trade on losses. But when I was earlier in trading, I still follow the same strategy, but I was not fearful, but I would definitely have sort of sleepless moments or sleepless nights, hoping that the currency pair would go back up again. And many times it did, and sometimes I did close out a trade at a loss. But basically, the other thing that you can do is that if the currency gets to a point where you have more unrealized losses in the account than what you have money in the account, Forex will close out the trade, and they're not going to end up in a hole. So they're going to close out the trade, and you're going to lose your shirt. You're going to get wiped out. You're going to lose everything. And so that's what happened to me a few times. So I've tried to learn from those mistakes. And what you want to do is you want to ensure that there's always enough in the account. In the 5142 is greater than the unrealized loss of 277.01. So you want to always make sure that there is definitely enough in the account to absorb those fluctuations. And so Forex doesn't take away your shirt and take away all your money, and then you have to start all over again. So again, like I said, you don't have to start at 5. You could start at 1. But if you start at 1, then you can't be as risky, or you can follow the same strategy, but you can't take as much risk as I'm taking now in buying, say, 5 lots or buying 20 lots. It wouldn't be advisable, because those market fluctuations can definitely hurt you. Like, say, for instance, if you only had $1,000 in the account, and and the unrealized profit was all the way up to $277, then what happened is that's like almost a third of the actual money in the account. And what that does is that will basically, the value in the account would decrease over time, and you can definitely lose your shirt. So definitely, I would say, develop your strategy, get involved in currency trading if you like it, or whatever stock or bond that you're interested in. Most important thing is save for a rainy day. Save your money, invest, and save for a rainy day. I guess most important, is pay your tithes. Pay your tithes first, then invest and save, and try to save for a rainy day, and try to limit your expenses, reduce your debt. And I like currency trading, so that's what I do. But you can invest in bonds, stocks, whatever that you think is positive, but get good advice, and only invest what you can afford to lose. So don't invest rent money or mortgage money or food money. Invest the surplus that you can afford to lose, and develop your strategy. Take care. God bless. Please subscribe, like, share, and you have a great day. And if I have any other positive lessons I want to pass on, or nuggets of information or knowledge I hope that you can benefit from, I will see you in the next video. Take care. God bless. Bye-bye.